discuss about how external factors affect the organization. As you know, there are different kinds of external factors in our environment which affect our organization in many other ways or different ways, which can affect its working and in a very strong way. It could be a positive impact as well it could be a negative impact. So
Yes, miss.
let's go forward. First, we will discuss like what are the external factors which may have effect upon our organization. Then we will explain why organization carry out Fiscal analysis. Then we will discuss the 3-step crisis management procedure. To carry on external influences on business. There are different kinds of influences which a business can have or can face during its phases of work or during its life cycle. There are 2 main analyses which we conduct in business to see how our business is working and how far or how can we make our strategies according to that. The first analysis is known as SWOT analysis, and the second analysis is Fiscal analysis. SWOT analysis, basically SWOT analysis stands for strength, weaknesses, opportunities, and threats. And it's a combination of these 4 things, which basically done in almost all kind of businesses to know that what are our strengths, what is the percent of the business, how strong it is doing, in what business it is working, what is its weaknesses, how far it has flaws in a certain area, or how weak it is doing in with its strategies, or what are its flaws. Opportunities, what are the opportunities available in its environment, how can it take advantages from the environment or from its internal environment or external environment. And threats, what are the threats available in the market, in the external environment, in the internal environment, what kind of threats are mainly for the business present in the market it is working in. So mainly have the idea that first 2 are internal and second 2 are mainly related to external environment. To carry on, SWOT analysis is a mixture of 2, just a minute.
Okay.
SWOT analysis is a mixture of 2 analysis, okay? The first analysis is internal analysis, which includes strengths and weaknesses. And the second analysis is external analysis, which include opportunities and threats, as we discussed earlier, that the strengths and weaknesses are related to the internal environment in which we audit our business, in which we look into our business, and that what are our strengths which we can work on, and what are our weaknesses on which we can work upon. And the external environment is the opposite totally, which includes opportunities and threats. The external analysis involves that. Like we look into the external environment, we look for opportunities, we look for threats which are available in the market, which are present there, which can harm us and give us advantage while working in the market. The internal analysis includes audit or checklists about a firm's strength and weaknesses. You can make a checklist like which department is you're working on, what things, what are their specialities, what are their expertise, what are their skills. You can audit them upon the basis of that. And it includes, same goes for the weaknesses. You can go for any department, any employee, any area of the business which is related to the internal part of your business. You can make a checklist or an audit list for that, and you can make cross-check which are available in your business and which should have to be available there. And the internal environment usually includes your businesses, all departments. Like it could be management, it could be finance, it could be accounting, it could be marketing, production, product and management, manufacture, operations, all departments. It includes your employees, your culture, business culture, and many more things which are related to your internal environment. Then we've moved forward to external analysis, which is our main topic. External analysis includes Fiscal analysis and compatible forces. These 2 are main things which define the external analysis. As we have discussed, the external analysis comes from SWOT analysis, and in SWOT analysis we have 2 major things which define our external analysis, that is opportunities and threats. And we determine our opportunities and threats on the basis of these two things, which is passive analysis and compatible forces. Are we clear till that now?
Yes, Mr. Cliff.
Okay. Now, passive analysis. It is a mixture of many different environmental factors, which are with external factors which are present around our business. It is a mixture of political, economical, social, technological, legal, and environmental factors. And when we conduct all these factors together, when we bring them all together on a page and do their analysis, what kind of political factors are present, economical factors are present, social factors are present, technological and legal and environmental factors, then we conduct their analysis, we look deep into them and compare them with our organization. We look into our findings and we compare that with our organization's findings and it's working. And then we conduct the analysis like how they can impact our business, how they're gonna affect the way we are working. Now, moving forward into passive analysis, first we have political factors. These factors are usually defined as factors that may determine to what extent the government may influence specific industry sectors or the economy. Like political factors are usually related to your government or the body which is in charge for your country as a whole, as a major external factor. It could include different things which is related to your economy. Like we all know that government is the major part affecting our economy. Like they make policies for us, they make regulations, rules for us. So different things depends on them, and it's all interrelated. It's all cyclical. It's a cyclic process which is interrelated to each other. So we have to look deep into that, like what kind of government we have in the present time era and how it is going to affect our business. So first thing which we look into political factors is government stability. Like, is the government stable or not? Is the government doing best, or is it facing deficits again and again? And is that there's some uncertainty that this government will last long or not? Is it for a shorter period of time, or will it complete its time? So it includes your government stability, like how stable is your government? Because it sometimes happen a government starts a project with a company, for instance, and then that government got defaulted, and in case the government has to shift, the new government comes, and that government closes all the projects that the previous government was doing. So that means that company has to face major losses in that, because now there won't be any funding. They have to use their resources, they have incurred their costs, and they are not going to do that. They are not going to reach the completion phase. That's why they are going to face many huge losses. This is how that government stability is important to check out, like how we can work in the longer run or in a shorter run. Next is tax regulation. What kind of tax regulations are in your country? Like what kind of income tax is present there? Now, tax regulation usually involves like what kind of taxes are implied on different things. It could involve your trade, it could involve your income tax, it could involve like how you have to pay the tax when you earn revenues, and all kind of taxes which are present in the external environment. Like, we have to pay sales tax, we have to pay tax related to like tools tax. These all are things which are related to your business. For instance, if you get to know that the tool tax is increased by 5%, now you know that the tool tax has been increased by 5%, and all your raw material and your major manufacturing material which you will use, which you are going to use for manufacture, will have to come by the route and have to pay 5% more tax than before. Now you know that the cost and the expense of trading that raw material or fetching that raw material into your business has increased. So it's gonna affect your business in a difficult way, and same vice versa. If the taxes are decreased by 5%, you know that your cost has reduced, your expenses have reduced. This is gonna make a different impact in your profitability, and it will surely increase your profitability to some extent. So tax regulations are also very important when you look into your environment or you do your business analysis. So you have to look around like what kind of taxes or tax regulations are gonna favor you in the future, and what kind of tax are gonna against you in the future, or how you have to take strategies or make strategies according to them. Now the trade restrictions. What kind of country you are in, what kind of region you are operating in. Well, we know that different cultures, different countries have different rules and regulations, which usually involves their trades, like what kind of things you can trade inside or trade outside the country. For instance, let's take an example for Muslim countries, and it is a very common example you can easily understand from there. We cannot trade like wine. It's very easy to know that we cannot trade pork because it is not halal, it is haram. And we made decisions on the basis of that, like Muslim countries cannot trade, which is not legal, or sorry, which is not halal from them. It might be legal, but it is not halal. So we restrain from things which are included in your institution, which have restrictions upon the trade. We also know that sometimes we got to hear the news like some country has put sanctions on these things, and you cannot trade it from there. As you have noticed that in Russia and Ukraine war, many sanctions have been imposed on Russia. Many countries have finished their trades, closed their trades with Russia. So this kind of restrictions also affect your business, like what kind of restrictions are gonna be on your country, on your business. So it's gonna affect your business in different ways. Trade restrictions, obviously it's a negative part, it is a negative impact, will definitely have a negative impact on your business. So you have to be careful while deciding the business, while choosing what kind of business you are in. The dominant political ideology, like what kind of government is that? Is it like the government which supports stability in the environment? Is it kind of the government or the political ideology, the government which is presently ruling the country? Does it support innovation in the country? Does it support the new sector, the new persons, new entrepreneurs to get encouraged and take part in the in the GDP growth, in the growth of the economy, in the growth of the country? Or is it some kind of a government which doesn't support its youth, which doesn't support its businessmen, which doesn't support its businesses, and employ taxes and made many sanctions and put trade restrictions, and it is not very stable? So this kind of thing, the political ideology also affects your business in this way. Bureaucracy issues, as we all know, bureaucracy issues involve like there is a system in which we have to face bureaucrats. They rule you, they make what they have said has to be done. It's that kind of a system, and you have to do that. It's like a hierarchical system which goes down and down from one party to other, and you usually find that is in businesses as well. It's like the organization can't work properly within the issues. If you're having bad issues in your country, though your government is imposing so much pressure on your businesses or on your business environment, so you have to be careful of that issues, and you have to look for the strategies, look for the ways which are going to help you in future, or which are going to help you in shorter term or longer term in that in the era of that ruling party. Fiscal policy is usually, there are two types of years. One is fiscal year and the other is accounting period. Fiscal year is that which is usually lasts from July to July, and the accounting period is usually that which lasts from December to December, or you can say January to January. Now, basically what happens in fiscal year is basically the time period, fiscal time policy. You can say just the fiscal, if you take that specific word, you can easily relate it to that time period in which your country is gonna be presented with the budget. when you will present the budget of your country, like how in the next year you are gonna work in, what will be your expenses to a certain thing, and how you will gonna take revenues or invest on different things. So fiscal policy, is it that the budget presented this year, is that the fiscal policy presented this year, is it helpful for your business environment or not? You're gonna look into that. So you have to make strategies, take decisions, or look into that, like what kind of decisions are going to help you with the current fiscal policies. Like for instance, this year the fiscal policy implemented in your country might have large amount of taxes implemented on different things. It imposes taxes on everything. For instance, you can say the tax rate has been increased by 10% on everything, which includes all your business expenses, which includes your goods expenses, each and everything. Now you see that you have many expenses coming your way. So you have to take the relative measures according to that, and which are going to prevent you, which are going to preserve you, or which are going to benefit you in the future. So are we
Yes,
clear?
miss.
Sorry?
Yeah, yeah. These are clear.
Okay, so let's move forward. Now we are going to talk about economic factors that determine of your economic performance, which will directly impact your profit. So economic factors, you usually look into the business environment. When we are talking about the business environment, we look around our economy, because the business is directly related to the economy. If the business is doing well, the economy will do well. If the economy is not doing well, the business may not do well. So these are like interrelated things which are dependent on each another. So these different factors impact the business environment and the profitability of the environment. For instance, let's take the first example, inflation. We know that the inflation, the major definition of inflation, I'm going to tell you it by a simple example. That for instance, in 2010, you can buy a basket of goods which involves all your necessities which a person need for a simple living. So you can buy a basket of goods for $10, but now in the current year 2022, you have to buy that same basket for $25. Now you can see that the inflation rate has been increased by almost 50, double that rate, or you can say 1.5% has been increased since then. So this inflation will gonna affect your business, because the buying power has been reduced of the persons. The buying power has not been increased, but the prices of the things which you are gonna buy, which you are gonna buy for the future, or for your manufacturing, for your business, have increased. So it might lower your profits, since we know that as the inflation increases, the demand for things decreases, and it affects your business profits, because people are not going to buy your things because it costs them much, and you cannot sell them on lower prices, because you know that this is not going to benefit you in either way, because you are at the back end buying them at a higher prices. So inflation affects your profits in that way. Now, taxes and duties. We know that as we have discussed about taxes are imposed on businesses. Duties have been imposed on businesses as well. When you trade something from outside, you have to pay a custom fee, you have to pay a duty fee, which is known as duties. So these duties or custom fees or taxes change irregularly on the basis of what kind of economic factors, how your economy is working. If your economy is in good condition, then these taxes or duties might be low. And if your economy is unstable, has very high chances of uncertainty, very high uncertainty present in it, then it will be high taxes, and then there will be high taxes and duties. Exchange rates, we know that countries usually trade in different currencies. We all don't share the same currency. So the major currency which is used around the globe as a standard currency is dollar. We all trade in dollars. So you know that the price of dollars is different in different countries. It is different in Pakistan, it is different in Saudi Arabia, it is different in United Arab Emirates, it is different in Kuwait. It is different everywhere. So these exchange rate affects your economy. Like if your economy is doing well, your currency is powerful, the currency of your country. For example, if we take the example of Saudi Arabia, if the economy of Saudi Arabia is doing well, the real present there is very powerful. It can increase its cost, it can value itself and lower the exchange rates, which are going to benefit your country, which are going to benefit Saudi Arabia. For instance, right now we take the example of Pakistan. The currency present there has been very devalued. The currency is not very much valued, so the price of dollar has been increased very much. So these exchange rates affects the businesses. How? Like you have to trade in dollars from the outside the countries. So the thing you are buying is for much higher price, is much costly because of the exchange rates, because of the rate of the dollar has been increased. So you have to pay much more than that which you were paying in the previous time. Finance and credit, like what kind of how much finance do you there's a major difference. Like finance is like how much investment, how much money, how much equity do you have present in your environment. And credit is like how much loan do you have to take from the outside the environment, or do you have to take your to run your businesses. So finance, like how you are gonna make the decisions, like what kind of debt you are going to for the persons, and what kind of equity, how much equity are you going to invest in your business. Always remember, keep this ratio equal or balancing, or always invest the major part from your equity, because debt is not going to help in many ways. As we know that the price, there is a time concept of time value of money. The value of the money decreases or increases by time. So that can cause where your business different kind of losses or different kind of issues. So always invest the major part with your equity. This concept, I guess it is clear, like how economic factors affect by finance and credit. Now we look at the to look at the cost of living. The cost of living is usually what are I have given the example of basket of goods in the inflation point. So same as the example is there. What is your cost of living? What is the cost of your necessities? Is it higher? Is it lower? What kind of inflation rates are present in the market? So if the inflation is high, the cost of living will be high. You have to pay high for everything. If the cost of living is low, if the inflation is low, the cost of living will be low. So companies prefer to work in those areas where there is the cost of living low. The lower the cost of living, the higher will be the profits for the businesses, the higher will be the profits and savings for the persons. They can save more, they can invest more into your businesses, they can buy more, their purchasing power increases. So this is going to benefit your business in this way. Now GDP is the gross domestic product. So GDP is basically gross domestic product. Like if your country have produced your country produces different kind of products, different kind of businesses are present in your environment, and it produces many several products. So the total of the profits generated by those products is known as the gross domestic products. It is a whole different calculation. You have a whole way to calculate that. So we don't get very much deep into that. But simply, if the gross domestic product is high, that means that the economy is doing well, the country is producing more, the companies are generating profit. And if the gross domestic product is low, that means the companies present in the economy are not doing well, they are producing less, and they are generating low profits. So are we clear on economic factors? Are we? Okay, I think we should move forward. Now we're going to discuss the social factors around personal attitudes, core values, and beliefs together with demographics. Social factors around personal attitudes, core values, beliefs together with demographics. Social factors usually relate your society, what kind of attitudes are present in the society, what kind of core values are present there, what kind of beliefs are present in the society. We value our culture, we value our attitudes, we value our beliefs. we usually are like in the form of groups, and groups affects each other. We make decisions, we do or make our decisions according to that. So social factors affect the way a business is working in your environment or in the environment. These factors have a huge or a main impact because all your customers are coming from that specific social group. Now, social mobility, what kind of social mobility is present in your environment? Like what kind of status? We know that there are different kind of classes present in the environment. Uh, Elite class, middle class, lower class. So what kind of social mobility is there? Education, are the people in your country educated? Because we know that if the persons are educated, they will demand for things which are going to help them, which are demand they usually demand for things which are healthy for them, which are healthy for the environment, which are healthy for the kids, they themselves. They will look into things which won't harm anything else. They will look for quality over quantity. They will not judge you on the basis of price, but judge you on the basis of quality. The GDP is basically the gross domestic product, which is calculated through a different calculation, and it's a whole procedure. We will not get very in depth into that. So, what is GDP basically? We know that different firms are working within the environment of a country, which there are different kind of firms, manufacturing firms, or goods or services firms. So we look into the goods produced, goods manufactured, and we calculate the gross domestic product from them. We look into the profits from them. So, and we look if the GDP rate is high, that means the companies are doing good. They are manufacturing good amount of products, and then that means your economy is doing best. If a country with a higher GDP is going to benefit your business, so you have to look into the environment. Or if you are going to work outside your country, so you have to carefully look into that country. You have to look at the GDP. If the GDP is low, that means the economic conditions of that country are not good. They are not producing much. They are not producing well. So that's how GDP affects, the rate of GDP affects your business or your profits. So are we clear on these points?
Yes, miss.
Okay. On social factors are basically factors around personal attitudes, core values, and beliefs together with demographics. So personal attitudes are basically a person's attitude, what kind of attitudes you have related to a business or within a certain environment. What are your core values? What things you give values to? What are your traditions? And what are your beliefs which are formed together in a society? We know that different countries, different religions, different cultures have different kind of beliefs which they prefer. On the basis of that, they do their workings, they perform their daily actions. So these factors as a whole together affect your business. Social factor is very important because we know that our major customer or all of our customers are coming from that social environment of a business, of a country. So we have to have a very clear understanding of that social environment. Now, the social mobility, what kind of social mobility is present in your environment? What kind of social groups are present in your environment? We know that different kinds of groups are present. Like we talk about the middle class, the lower class, the elite class, super elites, and we have like made a division in different sects. So this kind of social mobility provides us insight like how this country is producing, how the persons they have have the purchasing power, what kind of purchasing power they have, how they are going to affect our businesses. Now, education is basically we know that what kind of the rate of education is there, what is the literacy rate. So we're going to discuss from the education point. We look into like how educated persons are present in the social status of that country, if the illiteracy rate is high or low, because we know that the more persons educated, the more they're going to demand you. They will be concerned about the environment. Will be concerned about the things which you are providing them. They will be concerned about different kind of factors. They won't prefer quantity over quality. They will look for things which have quality among them. They will look for qualitative things. And then we go for ethics and religion. So ethics and religion relate to our social environment. Okay? What kind of ethics do we prefer? It's not like every culture has the same ethics. We share different kind of ethics. Every culture has a different religious perspective. So ethics and religion also affect your working, your way of doing things, your business environment. So we have to have a clear look, what kind of ethics are acceptable inside the country and what kind of not. For instance, I'll give you a simple example. For instance, we take interest over our investments, over our savings, over different things or transactions, which is considered ethical in uh, outside countries and foreign countries like USA, Canada, America, and different countries. But if we look at the Islamic perspective of that, it is considered illegal, unethical, because Islam doesn't support that, because riba is haram in Islam. So these ethical perspective also have a very huge impact on your business. So we have to clearly look into that, and by like what kind of environment, what kind of social status, or what kind of social area or region we are working in, what is their religion, what kind of ethical practice do they offer, do they support. Then we talk about the historical issues. Different historical factors, different historical events have impact on the minds of the people. They have a major impact. They shape their thoughts, they shape themselves. So they think according to them. So we have to look into their history, what kind of issues they have faced, what kind of things they will gonna demand us based on the issues. Then comes demographics. Demographics is a study of the population. It's the whole study of your social environment. It involves your what kind of income groups are present in the environment, what kind of social groups are present in the environment, what kind of age population, your teenage group, the percentage of teenage is higher than the percentage of old age or elders or youngs. So demographics is usually basically simply the study of the population. Then comes the attitudes and beliefs. What kind of attitudes do people show? Are they very much open-hearted? Are they very much welcoming? They support you on what kind of belief, or vice versa? They are narrow-minded. They are not very much open. They don't like to support people. They are very much reserved. And what kind of beliefs that specific social circle shares? These beliefs could be different things. We have seen different kind of people having different kind of beliefs. It could be related to your religion, or it could be related to your ideology. So are we clear on these factors?
Yes, miss.
Okay. So technological factors, factors including the rate of the rapid technological changes and innovation, and how that may have impact on your business. In technological factors, we usually look into the technology, how it is changing, and what kind of innovations are they are bringing to our business environment. We know that this is the era of technology and innovation. Every business involves technology nowadays. So these technological factors affect our businesses from external side, though it's a part of the internal environment of your business, as well as they are used for different kind of things, different departments for the major working of your businesses. But they have the external effect as well, as technological changes could benefit you or provide you opportunities or threats. It is related to both factors. So rate of change means like how rapidly the technology changes, what kind of changes it brings. Does it nowadays we see that within a decade or even within years, technology changes. The technology is shifting from day to day and into more advanced one. So this does this technology supports our business or not? Research and development. What kind of technology is used by research and development? are they high tech? They use high tech technology. They are use high advanced technology according to the needs of the business. What kind of innovation they can bring using that technology, which can affect the outside world. Production efficiency. If you are very much efficient in technology, you have mm, up-to-date manufacturing equipments which are very much related to your business. They are gonna increase your production efficiency. I'm gonna give you a small example of here is of Zara. Zara is a clothing brand which is highly efficient with their technology. They use machines for the cutting of their clothes, for the manufacturing of them, so which minimizes the human error. That means which minimizes their loss. Machines cut them perfectly, they sew them perfectly, and it has increased their production efficiency. It has increased their production quality and production as well. Now we talk about the quality. We know that technology has a direct impact on your quality. The better the technology, the better will be the quality. If you are going to use the low class technology, that means you are producing low class materials which are not going to benefit your business. Now pricing also depends on what kind of technology you're using. If you're using high-tech technology, then that means you're going to charge high pricing from them, because that technology costs you high. If you're using some normal technology, like you are producing basic necessities, you're producing donors, eggs, cakes, so you can't charge high for them. But if you are producing cars, you are producing generators, you are producing jets, engines, so you're going to charge high for them. So technology, what kind of technology your business involves, gonna price according to that. Intellectual property is basically the property which is used by your business, which is basically involved in your business. So it is your property upon which you show your possession, your authority. It can include your intangible creations. Intangible means that things which you cannot see or if you cannot touch, but it can be recognized by others. It can be anything, your ideas, anything related to your intellect, your knowledge, your skills, anything which is related to that. So that means if you have creative ideas that relates to the technology and innovation, that will affect your business environment. So are we clear on these points?
Yes, miss. It is clear.
Okay. Now legal factors internally and externally, that when change will affect your business, cash flows and profitability. We know that the legal factors, every country has their own legal factors, and every business has their own legal factors. You make your policies and regulations according to your business, and your country make their policies and regulations according to the environment of the country, according to the constitution of the country. So they both internally, that means the factors made by your business, and externally, that means the factor imposed by the outside, like the government, like law and enforcement institutions on your business. So first is taxation. We have gone into very detail about on taxation, what kind of taxation policies are there present in the country, what kind of taxation policies or taxation measurements have been taken by the government, or what kind of taxes are implied, enforced by the government or implied by the government. Then comes the employment. Your legal factors provide, say, employment laws, which can be in the favor of your business, which can be in the favor of the employees working in your business. So these factors also, different countries have different laws related to their employment. Like we have heard the basic law, which is like minimum wage law. That means it provides that this, for instance, if $500 is the minimum wage, then it should be provided to every employee. No one should be paid under that. So these employment laws save the employees from getting underpaid or from different kind of discriminations. Now advertising. what kind of advertising you can use. Can you use like very bold kind of advertising? Does your legal factors allow that? Well, we have discussed that earlier, like the country, the social environment of a country affects your business, your legal factors. So these legal factors are basically coming from your social circle. The what kind of social circle, what kind of beliefs are shared within the environment are gonna affect what how you are going to present your product to the customers, how you are going to advertise yourself. Then comes health and safety. Legal factors provide a clear guideline related to health and safety, like which kind of materials you should use in your product, which kind of practices you should use in your business, which kind of practices you should use while you are delivering your products, and what kind of duties are you, what kind of your duties are for your customers, like how you're gonna serve them, and you have to take look into your into their health and safety as well. You cannot provide them with products which are harmful them from them, or you cannot create environment or conditions which are very harmful for the employees they are working in. Then comes compliance. What kind of compliance do you have? You have to look into that as well. You have to compliance with them, and you have to look into things like the laws which have been implemented by the legal forces. Are they being implemented? Are they being enforced? Are they being followed? Are you complying with them? So you have to look deeply into that. Then comes the regulatory body, like regulatory bodies. These regulatory bodies are basically present in your environment, like they judicial institutional law enforcement firms. They make sure that you implement the basic laws, you follow the basic rules and regulations implemented by the country, or even if you are following your own rules and regulations, because we have seen that different countries say that this rule is present but they don't follow that. So are we clear on these points?
Yes, miss. Very clear.
Okay. Then comes the environmental factor, and environmental factors that may include geographic global changes, in addition to aspects such as tourism, agriculture, and how they may impact your business. Um, as come from the environment, it simply comes into our mind, like it is gonna include our environment in which we live, like what kind of environment we are living in. Are we it could be we have to look into our geographical area, like at which place, which region we are living in, what kind of global changes are coming into that area specifically according to the environment, or according to what kind of changes we are bringing to them, like as the example is given of tourism and agriculture. And the major impact of these things are on a business. Like if we look at the geographical area, I'll give you a simple example. Look at the area which is very hilly, rocky, and area which is very much plain. So you have to build skyscrapers, and but you cannot build them on hilly or rocky area, but you have to build them on the area which is plain, which is suitable for them. So the infrastructure you are working, the what kind of infrastructure does your environment support, does your country support, or what kind of infrastructure is needed for your business. So you have to look into that, into the geographical conditions of that country, and what kind of global changes are coming to that country. Global changes could be like heat forming, or weather conditions, or natural disasters. We have seen that they are increasing day by day because of the environmental factors are changing, geographical conditions are changing. So you have to look deep into that, the infrastructure as well. Energy availability and cost. You know that we know the concept of the countries, like developed countries, developing countries, and underdeveloped countries, also known as third world countries. So there, the developed countries have gone more much way forward. They have the energy availability available to them. They have lower cost available for them. Developing countries are still striving for them. They are trying to make resources usable for them. They are trying to make the efficient use of resources so that they can enjoy the availability of energy at lower cost. And the third world countries, are usually facing these issues because of less availability of resources to them. The cost of producing things there is high. They could be their economic conditions are difficult. Their environmental conditions are not that much supportive. So energy availability and cost is also a major fact which we look forward when we look into when we are talking about the business environment. The energy availability and the cost of using those availabilities, those facilities also going to affect your business. Disposal of materials, you cannot directly dispose harmful chemicals into your environment. This is going to affect your environment badly. This is going to affect your geographical regions, and it is going to be a part of your global change, which can cause global changes in your environment. So we have seen that different laws have been imposed regarding the disposal of materials. Now the legislation, different kind of legislation are present in your related to the environment. As we have discussed the disposal of materials, now different laws has been introduced for regarding the disposable of materials. That means the legislation has been passed, has been introduced regarding the environment, regarding the safety of the environment. So are these legislation being followed or not? And then cynical weather, it simply means that the weather conditions are changing drastically. We have seen that this year it has poured very much in India and in Pakistan and different countries. It has been very hot. It has been a very hot summer. It has made records. So the weather conditions are changing. The global environment is changing. The global warming is increasing. Greenhouse effect, and we have heard about so many phenomena which causes changes in the environment. So there is a very sudden change in the weather conditions, which is affecting the working of the businesses. Then comes the ecological consequences. That means what kind of environment do you have, what kind of changes the environment is facing, these and what kind of consequences these changes are bringing to your business. Like are these changes very helpful for your business or not? So you look into that as well. Are we clear on these factors?
Yes, miss.
Okay, now move forward. Here are some examples. It is basically taken from the US book, so I'm going to share it from the perspective of the US economy. So, like the political, economical, social, technological, legal, or environmental forces, they have the major impact on your products, what kind of products you are producing, what kind of services you are providing to your customer, your market, in which kind of market you are selling your product, and who are your customers. They all these four things have the major effect. They face the major effect by these external factors. Okay.
Yes, miss.
Then comes another example. For instance, we see the aging population in US. Less whites are present. The less whites, I mean that the diversity there is increasing. They are welcoming people from different countries and to work there. There are different kind of peoples, like there are brown people present, the black peoples are present, the white are present. So the gap of white and black and brown is decreasing there. Widening gap between rich and poor. The gap between rich and poor is increasing day by day. The rich is becoming richer and richer, and the poor is becoming poor and poor. Or might be there's a middle sect present in the country, but that doesn't affect much. Then in this thing, like in 2025, 18.5% population will be greater than 65 years. How it gonna help? Like what kind of information is it giving you? It is providing that in US, like in 2000, by 2050, 18% population will be more than 65 years old. So they have to look into the new forces. They have to look into the new means of generating income for them. They have to look into new employment, new employees which can generate benefits or profits for them. So they are moving towards more diversity. So they are welcoming the immigrants. They are providing conditions from them which are helpful for them. By 2025, for no ethnic and racial majority, it says that by 2025 there will be no ethnic or racial majority will be present. The diversity will be so much increased, which is gonna helpful for the business environment. Are we clear on that?
Yes, miss.
Then comes the other fact, like the world population is 7 billion. The world population will be 8 billion by 2028, and it will be 9 billion by 1954. And the US population will be greater than 310 million. What kind of information do you get from this?
The population is increasing day by day.
Yeah, but what kind of effect will it have on your business?
Should we should like think we should like
Yeah, think a bit. Okay, let me give you a hint. Look at the mere global giant. Look at Coke and Pepsi. They hit almost all the countries present in the world. Do they?
we should increase increase the productivity
Exactly.
because the
It is giving us the stats like we should increase our production by this much, as this is going to be the population of the new population of the world.
yes.
So you can easily guess from the population trends what kind of you can get the idea from that, like what kind of things will be present in the what kind of population will be present in your business, in your environment, and how you're gonna and how you're gonna affect them, how you're gonna treat them. There will be a major sector of teens, or there will be a major sector of youngs or elders, or what kind of policies or products you have to introduce according to them. Okay.
Okay, miss.
Then comes another thing, the trend, more American households with people living alone. Aging Americans affects all organizations. From the first line, we can easily guess like more people are living alone. That means more houses are required, more flats will be required, more furniture will be required. We can easily guess these things from that. And more
Yes,
aging of Americans, that means we have discussed already, like the greater number of aging people, they have to look into the youngs to work from them. They will go for immigrant policies, healthy or beneficial immigrant policies which attract other persons to work for them. Okay. Then
okay,
there's
miss.
a micro environment of an organization. If you look closely at that, there is economical factors. We have discussed social, cultural, demographic, and environmental, natural factors. We have discussed them. Political, legal, and governmental forces. We have discussed them. Technological forces. We have discussed them. Then comes the competitive forces. We will look into them. Okay. Then comes the competitors. We will discuss them about in our competitive part. But you basically all these things: competitors, suppliers, distributors, creditors, customers, employees, communities, managers, stockholders. All of these are part of your external environment. So you have to look into them. They will provide you the opportunities. They will if you have a clear knowledge about them, they will provide you with the opportunities, and you can take advantage of them. And if you have the clear knowledge, you can easily judge what is your threat which is gonna affect you in the business environment.
Yes, miss.
Okay. So we have less time left, so we will quickly move to competitive forces. So when we talk about competitive forces, that simply means we are looking for into our competitors. Then we identify our rival firms or or competing firms which are competing us. We have to look into their strengths. What is their strength, their weaknesses, their capabilities, like to what extent they can produce, what is their specialities, what is the opportunities provide available from them, their threats, objectives, and their strategies. Then comes competitive forces characteristics. Here are 7 characteristics of most competitive firms. You have to look into their market share. Their market share matters a lot. If they have the higher market share, that means you have to strive for the market share. Understanding what business you are in, you have to understand your own business, like what business you are doing, and you have to have a clear understanding about that. Broke it or not, fix it. It's a very unique phrase. You don't have to wait for the things to be broken, or if they are not. If you feel that there's something is need to be done, then do it right now. Innovate or evaporate. Do innovate, do bring new things to the table, to the market, on innovate. It might be successful, it might be unsuccessful, but it is gonna be a part of your journey. Otherwise, evaporate from the environment. If you don't do that, if you don't innovate, if you will stick to your old practices, you will evaporate from the environment. A major example and a very, very simple example of it is Nokia. Nokia doesn't innovate it when it was required, and now it has been evaporated from the market. Then acquisition is essential to growth. You can acquire a company. It is essential for the growth of your company. You acquired other companies, and it provides. It is essential for them. It provides you with the resources. It provides you with the land, the labor. You don't have to build the infrastructure on your own. So acquisition is essential, and is a kind of less expensive for your growth. People make a difference. Invest on your people, invest on your customer, invest on your employees, because they make a difference. These are the competitive forces which are going to help you. If you don't invest on your customer, if you don't provide them with quality products, they are not going to help you. So you have to invest on your people, because they make a difference. Always look for quality products, always provide quality products. If you don't provide them, there's no substitute for quality products. If you people are gonna hate you, people won't support your product, so you have to be focused, like the products you are providing, are they quality products or no? Because always remember, there is no substitute for quality. Customers are not gonna support you. Are we clear on these points?
Yes, miss.
Then comes the key questions concerning competitors. We have discussed, we have to know about their strengths, their weaknesses, their objectives and strategies, their responses to external variables. External variables are those factors which we have discussed earlier in Pestle analysis. Then their vulnerability to or alternative strategies, like how vulnerable will they be if we take different strategies, or how vulnerable will we be if they do the counter attack. Are we clear on these points?
Yes, miss. Like, I'll read them again, and if I'll had any problem, then I'll ask you. Okay, is it okay in the group?
Sure.
Yeah, thank you.
Then comes we have now we are going to question or form, like we are questioning ourselves. What are our products and service positioning? Like what kind of practices we are providing to them in the environment? What are our entry and exit of firms in the industry? How our firm is entering in the industry, or how is it going to exit from the industry? Key factors for our current position in the industry. Key factors for our current position in the industry. What are the factors which we require if we are the industry leader, market leader? Like what kind of factors are required for our industry position? And if we are not, what kind of factors do we require to reach that position? What are our sale profit rankings of competitors over time? We have to look into the sales profit rankings of competitors from time to time. You can see simply take the stats from their annual reports, which they publish on their websites. It is easily available. Okay. Then the nature of suppliers and distributor relationships. What kind of relationship do you have with your suppliers and distributors, and what kind of relationship does your suppliers and distributors have with your competitors? Then comes the threats of substitutes, product and services. There is always a threat of substitute present in the environment. You can always provide the customers with the substitute products at the lower prices, and they are gonna love it because of the price competition. So be aware of that fact as well. Are we clear on these points?
Yes, miss.
Then comes the competitive intelligence, a systematic and ethical process for gathering and analyzing information about the competition's activities and general business trends to further a business own growth. It is simply a systematic and ethical way through which you gather and analyze information about your competitors' activities, what kind of activities they are doing, in what kind of activities they are investing, what kind of businesses they are doing. So it is a systematic way of doing things. It is known as the competitive intelligence. Okay.
Okay, miss.
We have less than a minute. So you have to join again, and it will be a less than 15-minute session.
Okay,
We have
miss.
just 4 slides left, so 4 to 5. Okay.
Okay, miss.
Okay. I'll explain you first the objectives. It will take less time. Provide a general understanding of the industry and competitors. It provides you the understandings of the industry you are working in and your competitors. Identify area where competitors are vulnerable and assesses the impact of actions on competitors. You can easily guess the weak areas of your competitors, and you can easily take actions according to them. Identify potential moves that a competitor might make. You can easily judge their potential moves they are going to make in the future. Through these points we're going to discuss the sources of competitive intelligence. And the major source for it is competitive intelligence is internet. Upon internet you have everything available for that, for you. You can just go and search for anything you want to. You have access to different businesses and their websites. You have access to their products, what they are offering to your customers. Now you can easily judge from them. You have access to their annual reports. You can easily judge their profits, their income, what kind of things they have, how they are investing in other businesses, because it is all published in the annual reports. Then come employees. Your employees are also a very major source of your competitive intelligence, because we know that employees from one company have contacts from employees from the other company, and they share things about things happening among the companies or happening in the businesses. So you can easily include your employees in your business planning or in your decision making, and they will provide you with the necessary information if they feel that confident that the information is authentic. Then comes the managers. How you can use managers as a source of competitive intelligence. Managers are a very unique or powerful source of competitive intelligence. It is very common that manager of a one company has a very clear understanding of the manager of the other company. They know their qualification, they know their specialities, they know their weak areas, they know their strengths, and they can easily, based upon that, they can easily judge what kind of move they are going to take in the future. If you don't have that kind of knowledge available to you about the managers in your industry, then it is your lacking. You have to up with that flaw. You have to work on your flaw, and you have to be very much strong on the managers which are present in your environment. Then comes the suppliers. You can easily guess from your suppliers. There are sometimes your suppliers do things. For instance, if a supplier comes to you and told you that we are selling, your competitor is buying 10 units of a particular thing from us, aren't you going to buy that? You can simply judge that. That means that they are going to produce something new, or they are going to increase their production. It is giving you a hint what kind of things they are producing. So you can use your suppliers for that kind of information, or you can use your way of getting information from them. It could be like you can indulge them in a counter talk, and you can use them for providing a source of information for you. Same is the case of distributors. Your distributors may say that we are not, for instance, the distributors say that we have increased the price by 2%, or we have increased the price by 0.20 rupees per unit. Now that means you can easily judge that the price was low but the price now has been increased. That means that we are competing over something. The competitor is providing us with the higher price. That means they are doing something different. They have increased their production. They have to use more distributors, so they are paying them more so that they can be available for them. Same is the case with customers. Customers are like an open book and a very, very difficult thing to judge. You can directly ask your customers about the things which they don't like about you, or the things which they like about others. They can be very honest and truthful about that, and they can be very much complex about their choices and their differences. So you have to be very careful about your customers, because they are gonna make the word for mouth for you, and they can even destroy you. Then comes the creditors. For instance, if the credit you take loan from a certain company, or from a bank or something, and or anything. Now you notice that your creditor says that your competitor is taking a loan of 10 lakh, $10 million. Why are you not taking that? You can easily guess that your competitor is planning on something. It might be increasing its production, or it might be expanding itself, or it might be investing in some business. So you can guess from that. Then comes the consultants. You can take advice from consultants. Businesses do ask for consultants. They go to consultants and ask for different kind of advices. So you can easily ask them what kind of consulting services they are providing, what kind of consultation their competitors has used, and you can guess from that if they are expanding their businesses, if they are increasing their sales, if they are cutting down their cost. You can easily judge them. And then comes the trade journals. Different kind of trade ads have been given in the journals. Companies open their information in the trade journals, and you can easily guess what kind of competitive what is your competitor is doing. Then comes the want ads. Yeah, we know that different kind of want ads are. We see different kind of want ads on different sites nowadays, and on our print media like newspapers, and sometimes we even look at them at the billboards. So we can easily guess, like if the company is providing want ads, that means it is increasing the number of its employees. It might be increasing its production, for which it requires employees. It might be expanding, for which it requires employees. It might be introducing something new. It is working on a new project, for it required employees. Then comes the newspaper articles. The articles provide you a deep insight of what kind of things, what kind of practices a business is doing, what kind of activities they are involved in. So you can easily judge from them as well. Then comes the government filings. Government filings, government usually issues tender notices. Tender notices like of a bidding process, auction kind of a process. The companies bid on the government filings, on the tender notices, and if a government has to start a project, the different companies will bid their prices for that project, and the government will look into those companies and choose the best option for them available. And the most important and last one is competitors. Competitors itself is a source of information. Competitors provide you information about other competitors, or they provide, you can easily take information directly from their websites, their annual reports, their journals, their sales, their customers, and what kind of products they are providing. So are we clear on these points?
Yes, miss, you're clear.
Okay. So are we clear on objectives, or do I have to repeat them?
No, we did it, I guess. We're clear.
Okay. Then comes a three-step crisis management procedure. Is the last topic for today's discussion. Crisis management is a process designed to prevent or lessen the damage a crisis can inflict on a business organization and its stakeholders. As a process, crisis management is not just one thing, it is a procedure of dealing with external factors. As we have discussed, that the crisis can be generated. The external environment of a company, of a business, usually comes with the opportunities and threats. Opportunities could be very advantageous for us, but could be a part of the crisis for the company. Like if you are going to launch a new project, but that requires new resources, which can involve human resources, which can involve your material resources and other resources. So it can be like a kind of a crisis situation, like you have to invest upon them, you have to look for resources, you have to incur cost expenses, your expenses will be increased. So, and different kind of crisis are present in the external environment. For example, if the government has been changed and you have taken a project from them, now you are gonna face the loss. These are some examples of the crisis management. But basically, crisis management is that it is a process which is designed to lower the damage which a business face, or anything can be an example of it. We have discussed so many things about. Let's take the example of government stability. If the government changes, the business has to face the consequences. So this process is designed to lessen that impact so that the loss would not be that much that the business has to go bankrupt. So it is a process. It is not just a thing. It is a procedure of dealing with external factors, because all external factors are very important and they have a major impact on our business. Now it consists of three stages: pre-crisis stage, crisis response stage, and post-crisis stage. The pre-crisis stage, as the name suggests, the pre-crisis stage is the phase is concerned with prevention and preparation. It is concerned with the taking measures before the crisis happens or before it breaks in. So you have to be very much well prepared about the thing. About you have to do your homework very well, so that you have a clear knowledge about that, and so you can prepare yourself, you can prevent yourself from that, and you have a clear preparation about that. Are we clear on this phase?
Yes, miss.
Okay, then comes the crisis response phase. It is the phase when we are actually dealing with the crisis. The crisis has occurred and we are now responding to it. You have to be very vigilant with it. We have to have a clear knowledge of what kind of crisis do you have to face, and what kind of resources do you have which you can use to respond to that crisis. You have to carefully look for your strategies. Are this the thing you are going to respond to the crisis is going to help your strategy or not? It's going to help your business or not? Are we clear on this stage as well?
Yes, miss.
Then comes the last stage, post-crisis phase. The post-crisis phase looks for ways to better prepare for the next crisis and fulfill commitments made during the crisis phase, including follow-up information. It is the, as the name suggests, it is the phase when the crisis has been dealt with and it has gone. Now we have to keep ourselves prepared so that this type of a crisis does not happen in the future, and we have to fulfill our commitments and follow up our information which we have discussed or faced in the crisis stage. Um, and we have to fulfill these kind of requirements, like as we have discussed in the pre-crisis stage, like we have to do our homework very well. So in the post-crisis stage, we also do our homework very well so that we don't have to face the same crisis and another kind of a similar crisis in future. Are we clear on that?
Yes, miss. Still as well.
Okay, lectures for today has ended. Any question?
No, miss. I'll read it again, and inshallah, if I had any question, then I'll ask you, inshallah.
Sure, inshallah. And then take care of yourself. Allah Hafiz.
See you to take care. Have a nice day. Thank you so much.
Thank you.
You're welcome.